If you are not extracting consistent profits out of the markets after watching this video, that means that you are the problem. You are standing in the way of your own success. But don't worry, because today we're going to fix that. I'm about to reveal the exact steps that you need to master the US30 intraday. No fluff, no distractions, just a proven blueprint that works time and time again. I'm your host Christoph from Tactic Time Traders. Let's dive right in, guys. Here you have US30 on a 1 minute time frame. As you can see, we have the opening of the market, which is 9:30 a.m. right here. And let's go over the rules, guys, because we always have a set of rules that we need to follow. That's what successful traders do, guys. Okay? Rule number 1, use a 1 minute time frame and only focus on US30. Now, if you're struggling, I'm sorry, guys. If you're struggling making money, if you're struggling with trading or being consistent, whatever your problem might be, you are looking for more profits, more consistency, then just do what I'm saying right now and you will be thankful. Okay? Use a 1 minute time frame, only focus on US30. Why? I'm not going to explain because I want to keep it short and powerful today, but believe me, US30 is the best market to trade these kinds of setups, and you always want to trade during the opening of the market. That's rule number 2. Only trade from 9:30 a.m. till 11 a.m. Only do, if you're messing up those 2 rules, forget about it. You just need to follow those rules. Otherwise, it won't work. Use a 1 minute time frame, only focus US30, only trade from 9:30 till 11 a.m. That's what I showed you right here on the chart, guys. It's been marked out 9:30 till 11 a.m. Now, you can trade later on during the New York session also if you want to, but to begin with, just focus on that. Then number 3, mark out the external and internal highs and lows before the opening. So now let's do that right now. Let's check out. So what did we have right here? We had a high right there. Let me mark that red. We had a high right there. So we have 2 highs. So that's sell side liquidity, guys. So when we mark out the highs, we call that sell side liquidity. Now let's take a look. We had another important high right here. And now let's take a look for the buy side liquidity to see if we had some important lows before the opening of the market. We had one right there. So let's make that green. And we had 2 important lows right there. Okay, so that's it, guys, because now we are already far away here from where the price is when the market is opening. So now when the market is opening, we just wait to see which levels are being broken and which levels are being respected, and if the market is planning on making reversals around those levels. Now, it sounds complicated, but it's really simple, guys. So also you should know that this day seems to me like a pretty difficult day to trade, because we have broken many levels many times, but even though it was still a day where you should have been profitable. So let me show you really quick what happened. So the market opened, and as you can see, we breached the green level, the red level. So we had the sell side liquidity and the buy side liquidity being breached. But what we don't see happening right here is we don't see any wicks being created in combination with the reversal. So right here, you see we had this beautiful wick right there, but we didn't have the reversal. Okay, of course later on we had one, but here we had no wick. We just broke it and there was no wick. Okay, the market reversed, but we had no confirmation of the wicks. Now here the same thing, we had a wick, but we didn't break it. We didn't reverse. We didn't reverse again to the upside. So there was no reversal happening at that time. So all those setups are not the real setup what I am talking about, okay? So that's important to know, because you should know when not to trade. And that's very important right here, guys. It's a very good example when not to trade. Now, you can take trades, but those are more risky. So let's give an example. Now, where could you have you been trading? Now, an example could have been right there, guys, because here again we broke that buy side liquidity. We broke it with a huge red candle, but we never went underneath this low right here. So actually we're still uptrending. So as long as we're not breaking that, and now comes the important part, as long as we're not breaking that low from here and we are starting to break again above the buy side liquidity, that means that a reversal is highly probable. So you could also, so the breakout candle could have been your entry right here, and you could have also done this, like draw the fair value gap that's being created and trade the breakout of the fair value gap, which is right there. Now, as you can see, those are small trades. If you would have taken that trade, that would have been a small trade. I'm not sure about how many pips that would have been. 77 pips, guys. So that's a small trade. But still, 77 pips, give it to me every day, man. I mean, that's what we're doing this for. So it's a valid setup. But when you look at the other setup, it's much better. So let me give another. So there are more setups right here, guys. I can show you more setups in the same areas that you could have taken. But I just don't want to confuse you guys, because I want to show you the best, only the best setups. So that's right here, guys. Market has been manipulated. So we have broken this one and a second time. Okay. We have broken this one and we tested it here again. And then we broke it again right here. We broke this other level. And now we were aiming at this important level right here, because this came from this important high from the day before. So now that you know that, and you see that that beautiful wick is being created right on that area, and then you see that big red candle, that's called a color flip, meaning that if you are bearish and you have a small green candle forming, and then also that beautiful wick on that important zone, and then you see that bigger red candle, much bigger as the green one, so that's what we call a color flip. It's a good entry. That could have been your entry if you are trading color flips. So that's just one example of what you could have done. Okay, but what is important right here is that area and that wick being created. Now your entry strategy can be, I mean, I can make 100 entry strategies on top of this, on this liquidity strategy, with the wick being created, etc. Yeah, I can create 100 entry strategies that work. All of them will work. So that doesn't matter, because the most important thing is liquidity has been taken right here. Wick has been created. Bigger red candle showing the intention of the market, where the market is heading. Okay. The combination of all of that, that's what's important. If you enter on the candle after that, or in the middle of this candle, I mean, there are different risks and different kinds of confirmations, I know, but you would still have taken a positive, a profitable trade, guys. Now, let's say if you would have missed that trade, oh, you're unlucky today. Now, here you had an even better setup, and that's something you guys should know too. Now, now we know where the market is heading. We have seen that once that liquidity was taken, we have seen how aggressively the market moved in one direction. Okay, so if we are making a reversal and back testing and retesting again that same area where the market turned, it's important to note that here you had this very important bearish fair value gap. Now, why is this a very important bearish fair value gap? Because this was where the liquidity has been taken. This is the highest point we have reached during the opening of the market. Liquidity has been taken right here. We saw the wick, we saw the aggressive downtrend. Okay, So that's why the first bearish fair value gap that has been created, because we have more fair value gaps and we don't pay attention to those. So you have one right here and you could have extended until here. So this whole area is a fair value gap on its own, but we don't pay attention to that because market has already broken that too. We are paying attention to the most important one, which is the first one after a liquidity level that has been taken out, and you saw that the market made a nice move in the direction you predicted. That first fair value gap that's being created in that move, that's where you want to look out. If there is a reversal happening, you want to look out to enter another trade right there, guys. Because if you see that the market is respecting that area, and that's what we see right here happening. I mean, look at that. Do you see the wicks, guys? So here you had a beautiful wick, and here you had another beautiful wick. Here you had another beautiful wick. You see how all those wicks, how the market is, you know, the market can go through it. And you can clearly see that. So where is your entry right here? Your entry could have been on the breakout candle right here, the first red candle, red breakout candle, or you could have entered right there on the breakout candle, or here on the breakout of the structure from the low right here. I mean, this whole area would have been a great area to open your position. Now look at that trade. Now that's what I'm talking about. You see, that's what I'm talking about. Calling that sniper precision. You enter a trade right in this area, make 300 pips and more, guys. Here is exactly what you need to do to become consistent profitable. If you are still not being profitable after you watch this video, it's because you didn't take action or you didn't take the right action. Follow the steps, and I'll see you in the next one, guys.